DeFi, decentralized finance, lending, borrowing, stablecoins, decentralized exchanges, derivatives, insurance, liquidity mining, yield farming, airdrops, wrapped cryptocurrencies. Lots and lots of buzzwords out there that all kind of encompass this DeFi space, but what exactly is it? Well, DeFi is decentralized finance. And what it really is taking the centralized financial systems and institutions and essentially all the services and products and things that they offer to you traditionally through banks, stock exchanges, credit card companies, payment processors, and then incorporating that with the blockchain, or rather blockchain technologies and protocols, to enable you to do this yourself without the permission, without having to give all this information, without a lot of the downsides to traditional finance. So that is what DeFi is. But what exactly is it used for? What are the benefits? What are the cons? How does this pair up to traditional finance? And what is kind of the motivation to be involved in DeFi? We're going to be answering all those questions in just a moment after a quick word from my sponsor. Today's sponsor is OKX. On OKX, you can trade cryptocurrency, explore NFTs, DeFi, and more. If you use my link, deposit and trade, you can get up to $150 in rewards. And this is on until August 31st of this year. So check that out if you're looking for a new exchange. DeFi. There's a lot to it. Simply, though, DeFi is decentralized finance, and we're just taking everything that exists in traditional finance today and integrating that with the blockchain somehow, and involving cryptocurrencies, and really just removing the middleman who, in a bank, for example, I get charged, like $16.95, I think it is, every month for my banking fee if I don't have a minimum balance. There's nothing like that in cryptocurrency, right? That's just one example. Or if I want to wire transfer someone, it could take days, it could cost a lot. The simple act of sending money in a decentralized way is decentralized finance, which is pretty much any cryptocurrency that you could use. Stable coins, being able to lend and earn off of your cryptocurrency or borrow, and avoiding all the red tape around traditional institutions for lending and borrowing. There's so many different ways that you can earn on your cryptocurrency via DeFi. Now, as I mentioned, transferring money is pretty, universal to all cryptocurrencies, obviously originally with Bitcoin. But once you dive a little bit deeper into DeFi, you see that a lot of DeFi exists on blockchain protocols that have smart contracts, namely Ethereum and similar projects to Ethereum, but namely Ethereum. Now, a smart contract is a piece of code attached to funds that you're sending. It's very, very complicated, so I'm actually going to be dedicating a full episode to smart contracts and what that's all about. But a simple example of how they're used in DeFi is with a decentralized exchange, which I talked about the importance of these in my previous KYC episode. Naturally, with centralized exchanges, with stock exchanges, with anything that is involving traditional finance, or even, like I said, centralized exchanges in crypto even have to adhere to these regulations. You have to usually give them some sort of identification, whether it's your driver's license, passport, whatever it happens to be. There's a lot of documentation that you have to provide to prove that it's you. So one benefit of a decentralized exchange is that you don't have to provide all this information, and you can basically trade in a pseudo-anonymous way. That is one example of why DeFi is so powerful. And how that's used with a smart contract is that normally when I'm buying from a centralized exchange, I'm buying their cryptocurrency that they're holding a mass amount of, and they're making a little bit on the fees that they're charging for me to buy it. Whereas in a decentralized exchange, I'm actually buying cryptocurrency from another user just like myself, and the smart contract is essentially acting like the exchange would have previously. All the smart contract is doing in this situation is acting as an escrow service, which essentially just means that I'm sending my Ethereum and it's waiting there in escrow. The other person sends their BAT that I want the equivalent amount of my Ethereum that I've put in. Once they're both in there, then the smart contract executes and we both get the desired amounts that we wanted. We do obviously have to pay transaction fees, etc. But the idea there is that I'm able to directly buy from other people. I could do it anonymously. And there's just a lot of different benefits that you can't get from a normal exchange. Now, that's just one example. There's a lot of different things that you can do in DeFi. Most people, when they're talking about DeFi, are actually referring to different ways for you to earn off of the cryptocurrency that you have. Typically, that's things like liquidity mining, which is now, if we go back to that decentralized exchange, for example, on Uniswap, you can provide the cryptocurrency that is being traded between the people. So you're not necessarily buying it directly from someone. Well, you are, but it's where people like myself or you could provide both of the cryptocurrencies that might be used in an exchange, and then they will use your funds to essentially just provide volume and allow for people to trade that, and you'll earn some of those fees that I mentioned originally. So this allows you to not only trade decentralized in a decentralized way, but also essentially back trades that are decentralized and earn a profit from doing so. And then people get into yield farming, where they're trying to find the best yields to earn the most amount. And there's all these different DeFi coins, and people will get them and stake them. You can lend cryptocurrencies, for example. You could even wrap other cryptocurrencies. For example, on Ethereum, you can wrap Bitcoin and then be able to lend and do anything in the DeFi world with Bitcoin, but it's wrapped. Now, personally, I don't hold any wrapped coins. I'm more so a holder than getting into a lot of these different passive income earning things. The caveat being that it has to be fully decentralized for me to get involved, because while lending and all these different things sound really great on paper, a lot of them are still done through centralized exchanges. Now there's new services, products, things coming out to solve for this, where now we're starting to see actually decentralized lending and borrowing. We're seeing like with liquidity providing and mining, obviously that is decentralized. People can stake cryptocurrencies. And again, I would caveat that you should never stake on an exchange, because that's the same issue on a centralized exchange. You want to get a native wallet that allows you to stake that cryptocurrency from the wallet or through a smart contract. Essentially, the safest way you can operate in the DeFi space is that you're doing something where it's operated through a smart contract or it's done through a native wallet, because you still want to always have the control. I will be doing a future episode on why it's so important to have your own keys and not just leave crypto on an exchange or on a lending platform or anything like that. There's been countless instances of people losing their money, hacks, all these different things. So you don't want to risk that, essentially. Now, that is kind of an overview of the DeFi space and what is actually in here, what's the point, what can you do? Again, it's anything that you can do in the traditional financial market, but then in the cryptocurrency market. Now you can even trade stocks that are tokenized on various crypto platforms like Blockfolio, which is a centralized exchange, mind you, or FTX markets. The reason that that's so impactful is because then you can still invest in stocks without actually having to cash out your cryptocurrency. And for me in Canada, we can't buy fractional stocks, but I can actually do that using cryptocurrency. So there's a lot of different things that you can still do that aren't fully decentralized, I would say, because There's different aspects of DeFi that are run on centralized exchanges. Like I mentioned, a lot of lending platforms. Like a very popular lending platform, BlockFi, recently apparently took, I think it was $100 million loss. And that's pretty crazy. But the point being that there's a lot of different platforms that still want to take advantage of everything being offered here, but they're doing it in a centralized way. So you always have to just make sure if they're asking for KYC, if they need a bunch of information from you, if they're the ones holding your crypto, right? Like when I tried to withdraw from BlockFi, I had to KYC again to be able to get my funds out and then wait 2 days for an approval. That's the same problem that I have with anything else centralized. So you don't want to end up using decentralized products or things designed for DeFi in a centralized way, because then you're kind of defeating the purpose of DeFi, right? Some other uses are, airdrops, prediction markets. There's a lot of different betting applications that people use now in crypto, which again makes it way, way easier, because a lot of my friends like to gamble and bet, and to actually get your money out, it's just such a process, and there's all these fees and different things where you don't really own that money until you finally get it out. Whereas with smart contracts and a lot of different crypto betting platforms, you actually still have it. It's in a smart contract. You don't have any worries about that kind of stuff. So there's a lot of different ways that this is done. Even like non-fungible assets, people investing in regular finance, in art, different things like that. We're seeing NFTs are all over the place in the DeFi world as well. And there's even now like staking NFTs, NFT farming, NFT betting, just a crazy amount of different things that are popping up. And you essentially have everything that the traditional markets have, plus all this new stuff that was never really possible before, but now it is possible. So on top of decentralizing everything and allowing everyone to get in and participate, now you've got new features as well that are being built. For me personally, I think some of the best uses of DeFi is for liquidity mining, because that's a very good decentralized way to earn, or staking. I don't like lending and a lot of these different things, because most of them are done in a centralized way, though there are options that are starting to pop up, as I mentioned, like TrueFi or Aave. So there are new things that are coming into the DeFi space to solve these problems. And personally, when it comes to earning a passive income through DeFi, I stick to staking. But again, I think liquidity mining and yield farming and staking are all good, because you actually own the cryptocurrency yourself. I just prefer staking because it's the simplest way to go about it, and it's very straightforward and easy to do, whether I'm staking Tron directly from a Tron wallet or Hive on my Hive wallet. Again, you can stake on exchanges and all this different stuff, but you want to be trying to do this in the most decentralized way as possible. One caveat to all of this is that it is a little more complex to wrap your head around this kind of stuff, especially things like liquidity mining. So while it is a little bit more complex and there's a bit of a learning curve, it's definitely worth getting involved and learning all about it, and how you can actually earn and get invested as well. So what are some of the benefits and drawbacks of DeFi? Well, there's no middleman or gatekeepers, as I mentioned before. This is probably the biggest aspect of DeFi, that I don't have to request permission to do things. I don't have to, pay fees to hold minimum balances or any of these weird restrictions that you get in the regular traditional markets. You have total control and access to everything. Kind of goes very similar with the no middleman or gatekeepers, but the difference is that I have total control as well and access to everything at all times. So for example, a bank is closed basically half of the time and on weekends. And, if I want to do certain things at the bank, I probably can only do it during working hours. I have to schedule an appointment. All these different things. you have to go through all these different layers of people. You have to ask. You can't just automatically start doing stuff. And again, the bank does have the total control over your money. They can close your account. They could do whatever they want, in the same way that I don't recommend using centralized exchanges, or at least keeping your crypto on a centralized exchange specifically, because I do trade on centralized exchanges and then I withdraw my funds typically from the exchange because I don't want to leave them there. Now, I'm open. I mean, one of the benefits is that it's open to everyone. And there's really no barrier of entry. This is also in a way a con, but more so a benefit, because anyone can get started with DeFi. Anyone can create a wallet. As I said, you don't need any documentation. So this doesn't hurt people who, for some reason, can't get documentation. Anyone around the world can instantly start right away, and there's no issues, right? Even something as simple as getting started with a bank takes a lot of different procedures and processes to actually get that started. You can start this immediately. The downside of that is that it's very easy for anyone pseudo-anonymously to create some random coin. There's rug pulls, scams, all that kind of stuff. So that is a problem on the downside as well. You don't have to provide any personal information or KYC. So again, pseudo-anonymous. You can actually trade privately. You can just have financial privacy, which we're seeing less and less of, and it's being stifled more and more in today's society. Typically, they're very transparent and open source. You can see everything that's going on. A lot of the cryptocurrencies and their ledgers and everything is all public. So very, very transparent and open. You know what's going on. For example, I don't know how much money the banks actually have in the banks. Typically, it's less than 10% of the total wealth, which is very concerning. If everyone wanted to withdraw their funds, all the banks would crash. You don't have any issues like that with these cryptocurrencies and the DeFi markets. It solves remittance issues for transfers. This was kind of the original, going back to the original use case with Bitcoin and just any cryptocurrencies, being able to send them extremely fast and for very low fees. Now, Bitcoin has gotten more expensive, but it's still infinitely better than traditional wire transfers, etc. Today, I focus more on currencies for things like that, like Bitcoin Cash, Litecoin, Dash, because they have extremely low transaction fees and they're extremely fast. So I treat those more as every day-to-day, currency. And it's censorship free, which kind of goes back to what I was saying before. A bank can close your account. We're entering into a world where your political opinions, all these different things can have an effect on your ability to either earn an income or even to just keep an income. A great example of this is the CEO of Library. Now, I believe it's called Lab from Mars. He had his bank account closed from TD. His wife's account was closed, and his son's account, who I believe was like 6 or 7 at the time. So, ridiculous that they would close like a 6 or 7-year-old's bank account. But it was just that he was involved with the company, and thus they didn't like that, and they just shut down his account with little to no warning. Now, that's just one example regarding cryptocurrency, but there's political reasons. There's all these different reasons why a bank might close your account. To some people, that sounds like conspiracy, but you can search it up. It happens all the time. People get their bank accounts closed. So, censorship is becoming more and more of a problem, financial censorship. And we're seeing payment processors, for example, like PayPal. They've banned sex workers from being able to receive payments on PayPal. So now they're starting to regulate morality with financial censorship. And people who are starting to invest in cryptocurrencies, for example, on PayPal, PayPal has said that we are going to decide who you can actually spend with and who you cannot. So they aim to enable you to spend your cryptocurrency on PayPal at stores, which is amazing, but then they want to regulate and control all that. So a lot of what these massive institutions are trying to do is take a decentralized product like a lot of these different cryptocurrencies and then re-centralize it under their control, which is what we're starting to see more and more of. So it's very important that we do have DeFi and decentralized financial tools to be able to do these things on our own and get away from traditional centralized institutions and payment processors like PayPal. Generally, there's no downtime and you can use it 24/7. As I mentioned before, the bank is closed a great deal of the time, and I can do this 100% of the time and trade and just perform any of these transactions at any time, holidays, whatever it happens to be, no issues. And part of why that's so important is, a lot could happen over, say, the weekend. Or, for example, with stocks, you've got accredited investors and people with a great deal of money who are given special features and special access to certain things that you might not be able to, or to be able to trade after hours. All these different things that kind of restrict the newer users and give them less ability to use these financial tools. You don't have any of that in the DeFi world. Everyone has the same level of access, the same level of control, and the same privileges and abilities. So some of the drawbacks, I've already mentioned a couple, but depending on the cryptocurrency you use, it could be more costly based on how often you're doing things. So Ethereum's gas fees have been much higher over the last year or so, and that's deterred some people from participating in various aspects of DeFi. But as this is improved with Ethereum 2.0, and we have all these other protocols that are getting involved now, so I don't think that's going to be a big issue in the future, but currently it is something that you should be aware of. Obviously, markets are extremely volatile in the DeFi space and just crypto in general. So you do have to always keep that in mind. Nothing is 100% perfect, but DeFi is definitely providing amazing solutions for people to take advantage of. You have to track everything very in-depthly for tax purposes. Now, I'm pretty sure you still have to do a lot of the same stuff for stocks, but a lot of exchanges and stock exchanges, etc., make it very easy to track a lot of this, whereas you have to do a lot of this stuff manually because there isn't like a history or like a ledger, for example. There isn't a lot of information that you could easily get on a spreadsheet and then, plug it all in. At the same time, this could also be a benefit to an extent if you're trying to trade anonymously or, avoid taxation. Not that I recommend that, but it's really only made possible through things like DeFi. So I can see why governments, etc., would say, financial privacy is tax evasion. But I think people have a right to be able to do things privately. And it really just comes down to your own morality and ethics if you are going to track that and pay taxes. Now, regulation varies greatly from place to place, and it could definitely change at the drop of a hat for, different things. Different things could be regulated very differently, whether it's crypto lending or staking or whatever it happens to be. We could see drastic changes. So you do have to kind of, keep up with things and make sure you know what's going on, especially whether or not being involved with crypto at all is legal where you live. Obviously, make sure you know all of that before you start getting involved. Typically, DeFi is more complex than its, centralized counterpart. Obviously, it's a lot easier to buy a regular stock than a tokenized stock. But I believe that once you kind of get familiar with everything, it becomes much easier to do. Plus, a lot of the applications and things out there currently are, improving their UIs, and they're trying to make it as easy as possible for people to get involved. And I believe it's just going to get easier and easier. Plus, if you're already somewhat familiar with investing in stocks, it's not a huge leap to get into DeFi. But if you've never invested or done anything at all, it will probably be a bit daunting. Or if you're in the cryptocurrency space already, you'll probably be fairly familiar with a lot of these things anyways. So anyone can get involved. I already talked about this. The drawback essentially being that we have tons of scams and all these crazy rug pulls and all these different things going on. Like we saw Iron Finance, tightened by Iron Finance with Mark Cuban basically getting rug pulled. And we have all these crazy, stupid coins coming out with scams from celebrities, etc. And, that's all terrible. But if you're focused on the really quality stuff and you don't, go around looking for insane promises and ridiculous expectations, then, you should be on the right path. Lastly, there can be vulnerabilities in smart contracts that hackers or whoever could exploit, because a smart contract is always executed exactly as it was written, meaning that if you made a mistake, it will execute accurately. And if that mistake offers hackers the option to exploit that mistake, then, there's an issue there. But for the most part, if you're just like doing basic stuff, you're trading on Uniswap and such, I wouldn't really be too concerned about things like that. It's more for very new, not highly tested products, etc., which I would say probably don't even bother with anyways. So yeah, that is all the drawbacks. Honestly, like my final recommendation and thoughts is just that I like DeFi. I think it's basically the main use case of cryptocurrency because it essentially covers all of the important use cases more or less. And the problem with DeFi is what I see mostly for DeFi is a lot of like crappy coins and like buzzwords and like all this stuff going on. And a lot of them are just like, look, we give you really high yield. This is the only use case of our cryptocurrency. I think that's kind of sketchy. And like I said, with tightened by Iron Finance, that was exactly what got Mark Cuban rug pulled. So if Mark Cuban can get wrecked on something like that, I don't think you should be thinking you're like way better at investing than he is and that you're going to figure it out. And so my personal recommendation is to just stick to cryptocurrencies that have products, they're useful, and they have good fundamentals, etc. Don't be chasing yields or going for all these marketing and buzzwords and stuff. Make sure you're actually looking at something very legitimate, and I would just avoid scrounging through all the projects to find some gem that you think is going to 100x, because that's just unrealistic, and it's better to focus on quality projects and things with really good fundamentals. That is it. Let me know, did this answer your questions about DeFi? Did this give you a good overview of the differences between centralized finance and decentralized finance? Again, the main difference is really just that we're taking away the need to ask, right? If I want to get money from my bank, I technically have to ask them for it. Or, if I want to open a stock account, I have to apply and go and set up an appointment and all this different stuff. If I want to wire transfer, if I want to even switch bank accounts, whatever it happens to be, there's always a process. I have to get approvals. I have to provide documentation, all of this stuff that just makes it less ideal for you. And decentralized finance, or DeFi, tries to remove all of that strenuous processes and just make everything better for you. While there is a little bit more risk potentially, I think you've got way more control, but you obviously got a little bit more responsibility and risk along with that. So at the end of the day, I think it's more important to have, full control access, and with that have some more responsibility than giving up that responsibility and putting it on, say, the bank, but then the bank can also close your account. So it's much better to have that peace of mind, that true control and access of your funds, As I've said to many people, the only thing that cannot be confiscated is your cryptocurrency. Everything else can be easily taken away, whether it's, coercively from a robber, for example, or it's like the bank closing your account or whatever it happens to be. So, or the government getting involved and repossessing anything that you own. The only thing that they really can't get at is your cryptocurrency held in a private wallet that you control. So let me know what you guys think about DeFi. How are you involved with DeFi? Are you doing anything in that space right now? Let me know if you have any projects or anything you want to shout out. Feel free to do that in the comments as well. Thank you so much for watching to the very end of this video. If you did, make sure to comment #1ham in the comments below. And that way I know you watched to the very end. Anyways, thank you so much. I'm Scott Cunningham, aka Scotty Business, signing off. Cheers.